So the most important question I've been getting from traders all over the world is, Leo, why aren't you buying puts? Leo, why aren't you shorting the market? Guys, I'm going to explain in this video why this is absolute madness to short the market right now. And I'm going to review the basic market structure with you to explain why market has to go higher before it can go meaningfully lower. But the most important part in this video is the market psychology. If you're a trader, if you're trying to figure out the markets, how to day trade, when to get in, when to get out, guys, this video is incredibly important because where most of the traders fail is understanding the market psychology. So without any further ado, let's jump in. Let me just share a little bit of insight from my personal experience of trading many years in the market. If I was to summarize it to just a few things that were of great importance, and that would be a great generalization on a lot of things that I could certainly expand over the next 500 videos. But if you are trying to learn, here's the most important thing to understand. It's simple. Okay, you cannot be doing what 90% of other traders are doing and make money in the stock market. You can be sheep. In other words, you cannot follow the news and make money. The news that you're watching is just a simple representation of what has already happened yesterday. What has happened yesterday is not going to help you make money in the market today, certainly not tomorrow. So understand this, that what most of the traders are talking about today is the result of what has already happened. And that's certainly not going to help you put a 10x or 20x sort of trade together. So in other words, you can follow the herd and you can make a little bit of money, but you will never make 10, 20x, certainly not 50x trades by following the herd. So the key thing here is to make sure that you're figuring out what's not obvious to the majority, what's not obvious to the herd, what's not obvious to a bunch of junkies that are on different media platforms typing their way out about, oh, this is what could be, oh, this is what's going on today. Nobody gives a shit, okay, what millions of people are thinking out there. If you want to trade the market successfully independently, you have to have your own point of view in the market, but you'd better be able to back it up with something. And at some point, if you understand all the curriculum we teach you here at 13 Market Moves, you're going to be able to shape your own opinion on the markets, which is going to be independent of what they're talking about in the news today as the result of what has already transpired yesterday. So following the news, Bloomberg, CNBC, any other media channels that you follow, not going to make you any fucking money. It's certainly not going to make you any real money that's worth even discussing. But being able to develop your own point of view on the market, being able to understand exactly the specifics that you're looking at from the charts to the psychological standpoints is what's going to position you to ultimately trade the markets independently. And it is going to come with a lot of work, which a lot of people don't want to do. So again, the money is made by figuring out what's not obvious to the majority today before it becomes obvious to the majority tomorrow. That's the key. Okay, so most of the people, they're just focusing on a lot of media coverage when they're trading. They're focusing on a lot of stuff that doesn't have any relevance to your trading decisions today. And in this video, I'm going to give you a lot of examples. Trader 1 compared to Trader 2, same trades, totally different outcome. How can you learn from this? So now you understand the basic point. You can't be doing what 90% of the people are doing out there if you want to make big money in the market. You can't be listening to a bunch of goofballs out there. Okay, you don't know their time frames. You don't know if they're investing for the next 5, 10 years, for the next 5 days. So you can't be listening to a bunch of goofballs out there trying to shape your trading decisions today. Now that you understand that, understand this. Trading is not a popularity contest. And it seems like most of the people that are trading, they're just trying to find some confirmations or affirmations of their trades by trying to see if other people are agreeing with them on their trades. Well, if you follow our channel here, 13 Market Moves, you know that we don't give a shit about that. And that is why we beat the market in most instances while other people fail. So the most important part here is to understand that when so many people or too many people agree with your outlook on the market or the trade you're taking, the less likely it's actually going to make you money. So if you've got an idea and a lot of people are like, oh yeah, I really like that. Oh man, that sounds good. Let's go on with that trade. Well, that's your alarm button saying, hell man, oh, that's got to be a shitty trade. You cannot have majority of the market participants, okay? You cannot have even a YouTube channel where a lot of people agree with your trades. I mean, if a lot of people agree with my trades, fuck it. I mean, that's bad sign. I want people to disagree with my trades. I want people to say, man, you're a fucking idiot. I love it, okay? That tells me that I'm on the right track, because when most of the people agree with my trades, shit, I noticed that they don't make a lot of money, okay? And the only reason you should be trading is to make a bunch of money. Otherwise, you could be spending your time doing something else. So hopefully you're not here to just make a few $100s a day or $500 or $1,000 a day. Hopefully you're here to learn how to meaningfully transform your trading account. What I can tell you, if you're on a mission to do so, then being popular in the market doesn't make you money. Having an idea that a lot of other market participants eagerly agree on doesn't make you money. So that's a checkpoint. If you have an idea, a trading idea, and a lot of other people are supportive of it, stay the fuck away from that trade. So that's a little bit of an insight for you if you're trying to make big money in the market. When everyone loves your idea, it's not a good idea, because it's not going to make you a lot of money. When the idea is so obvious to everybody that it's going to make you money, it is not going to make you any fucking money. All right, so the goal here is to pursue ideas that other people don't seem to find a consensus, don't seem to be popular, because those are the ideas that could create some substantial traction for your trading account. And to elaborate on this, I'm going to give you something that is just so simple when it's put in the charts. Instead of me just trying to talk and explain this, let's get down to charts, guys. So basically, here's what we got here. Google. That's Google chart for the last 48 hours. And the question is, does the chart look bearish? Does the chart look bullish? Like when you're here trading today, 10 o'clock, Google drops to 21.34. Then again, it drops pretty close to that level, 21.38, 21.39. Okay, when you look at this chart, okay, what do you want to do as a trader? What do you want to do? Do you want to buy? You want to buy Google calls? You want to buy Google puts? So, I mean, clearly with the way I'm explaining things in this video, you'd be like, well, yeah, you probably buying calls, Leo. Well, damn right, we're buying calls while other people are buying puts. But I mean, the point is, if I didn't give you the introduction of this video, you probably, realistically, if you were trading the markets live today, you watch Google pop, drop, pop again, drop again, you'd be like, oh man, I mean, with all these bearishness in the market, certainly you don't want to be buying calls here, right? So naturally, psychologically, an average trader would look at this chart and be like, hell no, there's no way I'm buying calls. But yet that is exactly what we send you to call to action today. Is basically, hey, take Google calls right here, and at this point right here, guys, when the chart looked bearish for a majority of the traders, right, we said Google 21.39 was the entry. At that point, we suggested you take 21.50 calls for today's Google and 2,200 calls for next week expiration. And then, as you can see, guys, there's not a word here being mentioned about any sort of puts. It's calls, calls, calls. Do you see any word that says puts? Anywhere. Calls. There's not one thing about buying puts here anywhere, and I'm going to explain that on charts and I'm going to explain this on charts and other examples just briefly. But understand, this is what appears to be a highly bearish chart, especially if you look at multiple time frames. But yet, this is the point where we send you the alert today in the group to buy calls. And if you did, okay, this is exactly what happens next. So this is the entry, okay, and the entry often coincides with nobody wanting to buy calls anymore. And so this is a really good size move considering how underpriced the call side options were today. So this trade made anywhere from 5x to 15, 20x, depending on exactly what strikes you had on this trade with today's options expiration. Okay, so the entry was right here. Look, when things just looked like, oh, it bounced 1, 2, 3, triple top, it's dropping again. Sure enough, it's going to make an hour low. We said buy calls right here. That was the entry, and this was the exit. And utilizing weekly options expiration that expired today on Friday, July 1st, this was a phenomenal trade. Okay, now the lesson of this quick illustration is the market is in a position where nobody wants to buy calls anymore, which is a huge benefit to those that are willing to take the risk. Nothing is going to be risk-free in the market, but what that translates to 13 market moves. In 13 market moves language, okay? This right here, guys, nobody wants to buy calls anymore, all right? This translates into a huge opportunity. Huge opportunity because you have to understand when you trade in options, the number one reason why you could be making huge money if you understand the timing when option premiums are deflated. So this here, nobody wants to buy calls anymore. Okay, option premiums are cheap. Okay, you make money, buy stuff. Cheap, sell high. Buy low, sell high, right? So options premiums deflating offers you a huge opportunity in context of the market while everybody is still so damn bearish. Every time you look at the media, it's another bear piece of information. Oh, it's another huge catalyst for the market to go lower. Things just can't get worse. And when you think they can't get worse, here's another headline about something that is just incredibly worse when things just look like they can't get any worse from yesterday's. So basically, you're in a situation like, okay, well, option premiums are cheap. Okay, and that presents when you can buy options cheaply. Okay, this is where you can actually nail some of these 10x, 20x type trades. So when the market is moving like crazy and everybody understands, oh, the market is dropping huge, but it can bounce, but all that stuff, right? Options premiums are huge. But when stuff starts to go sideways, okay, you have a chance to buy options super cheap, whether it's a call or a bear side. And within that lies the opportunity for you to do a 10x, 20x type trades. If you want to learn more about that, make sure you schedule a 20-minute coaching call with a senior trader. So here's the difference, okay? Here's the difference between a trader number one right here, who trades with a ton of fear, okay? You should not come to 13 market moves, okay, if you're not going to follow the program. People come to 13 market moves. If you have fear as a trader and you're trying to overcome it, great. Sign up today. Now, if you have fear and you sign up but you're not willing to follow through with what's required from you, fucking don't waste your time. Don't waste our time. All right? So here's the difference between a guy that's fearful but he doesn't want to be coachable. Okay, fear. Everything about this trader one guy is just absolute fear. So here's the alert that he gets from me today. Like, buy gold calls, 1805 strike. I'm asking the guy to send me a picture so I can see the position and everything. So he's saying, well, I didn't answer. I'm asking him why. He says he didn't want to chase the entry. Well, I gave him the trade when gold was like at 1790. If you follow the gold pricing today, gold shot up all the way to like over 1,810 bucks at one point. So This trade right here I gave him, guys, I mean, it made over 5x. And so he didn't chase the entry. I'm telling him, okay, fine. You don't want to chase it. Put 5K in gold. Put 5K in 37.80 strike on ES calls. The guy responds, sorry, I don't trust this market. Guys, are you fucking kidding me? Look, it's not about trusting the market. What are you know, from another planet or something? You don't have to trust the market to trade it. You have to trust yourself to trade the market. And the only way you can trust yourself to trade the market is by understanding, okay, using certain methodology, what exactly is going on with the market. So a person that tells me, sorry, I don't trust the market, well, this guy is absolutely clueless. Like, this guy needs to not only take all the courses, he needs to sign up with all 7 coaches here at 13 Market Moves to study the program. Because I cannot trade with a guy like this. This guy is absolutely zero coachability. I can't even help a guy like this. So, number one, you come to sign up with 13 Market Moves, you got to be coachable. Because this is how big the difference is, okay? So, Trader 2 studies the courses, pays attention, understands what a move 4 is. He comes in, he takes his account today from $2,000 to $3,000. He makes $15,481 P&L for today. So his account basically goes from like $2,500 to $18,500. Okay, 9x. The guy 9x his account, while this guy is doing what? Well, I don't trust this market. So this guy trusts 13 Market Moves curriculum, studies the courses, dedicates, works his ass off, doesn't give up. Boom, there it is. 9x right here. 9x for this guy. While this guy here is complaining, bitching. I don't trust the market. What kind of fucked up excuse is this? I don't trust the market. So I told the guy, then don't fucking trade then. You know, why did you fucking sign up? Don't trade. If you're that fucking fearful, you can't pull a trigger and trade. And I told him to put, like, understand, this guy only put like 2,500 in his trades. Told this guy to put 5K here and 5K here. This guy would have made in excess of $90,000 today. 90 grand. Okay? Instead, his fear is causing him to miss on this $90,000 profit today. Now, what's worth what? I mean, if you're going to be a trader, okay, at some point you're going to come to a realization. Listen, you've lost money on your own. All right, you can keep doing it. Like, look, I'm not trying to judge you. You don't want to coach. You don't want to study shit. You want to sit on your ass, not understand the charts, and you want to go take the next trade, and hopefully the trade is going to be profitable. Hey, that's your choice. If that's what you want to do, that's fine. Okay, but that is normally what happens when somebody responds, sorry, I don't trust this market. It has nothing to do with if he trusted the market or he doesn't trust the market. It has to do with where this guy is in his trading and understanding the market structure and how he fucking trades. He doesn't trust the market. What this really means is he doesn't have a fucking clue on how to look at the market. And therefore, there's a difference of 9x between a guy that does try to study and between a guy that is fucking clueless. And he doesn't even want to take his time. So listen, 13 Market Moves, you want to be this guy? Guys, you need to find another fucking place. Okay, you want to rock? Okay, you want to take on the challenge, you want to beat the market, you want to take your account from 50K to $1 million, sign the fuck up. Stop wasting time. All right? But please, 13 Market Moves, certainly not comprised of guys like this that bitch, whine, and complain. And, you know, they have a period. That's that period of the month where they don't trust the market. Okay, don't be a bitch. If you're here to trade, fucking trade. Let's go. All right, so the point of this is, all right, don't ever underestimate your ability to perform at the highest level. hey, you may be doubtful of exactly what move the market is going to make today. Okay, but you got to show up, and you cannot doubt yourself or your ability to beat the market on any given day. Okay, you show up with a halfway losing mentality, I promise you, the market is going to beat you each and every time. You have to work your ass off if you want to be great at something. And trading is no different. For some reason, people think they can come and trade and they can have this beautiful day and do nothing and sit on the beach and sip margaritas. Crap, that doesn't work in real life. You have to work your ass off at anything that you want to be great at, okay? Which unfortunately most of the people are not willing to do. If you're not willing to get out of your comfort zone, okay, bad news, you're probably going to be where you are at in life for many, many years until you decide to get the fuck out of your comfort zone. Number one, believe in yourself, believe in your ability to perform at highest level, and show up every day studying the charts, studying the moves, studying everything. And even when you do all of that, it doesn't guarantee, okay, that the market is going to do exactly everything the way you calculated it to do. But you have a much greater chance of beating the market when you show up prepared, when you show up with a winning mentality, than when you're not. You certainly can't have remarks like, I just don't trust the market today. No, the market gives you an opportunity every day. The question is, did you figure out how to trade it or not? That's what it boils down to. So this is how this story looks on the chart. So here's the situation here. This is the market today, S&P 500. So we pop and we have this strong size drop. Okay, and so this is when I tell the trader one to get into the trades. I tell him to buy calls. I tell him to buy calls in the market, tell him to buy calls on gold. And he's like, well, hell no, I'm not buying calls here. Are you crazy? Who wants to buy calls right here? Raise your hand. Nobody wants to buy fucking calls here. But that's why it makes you money. Because nobody here thinks that the market is going to have a substantial bounce for the day. That's what makes this trade profitable. The majority is yet to find out that the market is going to move higher. So trader 2, however, focuses on the part of the move 4. And if you started the 13 market moves curriculum, okay, you would know that a move 4 is going to be really tricky. It's going to mess with your psychology. So if you don't know what a move 4 is, it would be very easy for you to say, I don't trust the market today. Well, indeed, you shouldn't be trusting the market. You should be thanking the market for the opportunity that comes with a move 4 formation. So as you can see, when the market drops, what do we tell you? Major rip higher. Guys, look, this was like way early. I mean, this is 10 o'clock. We're telling you major rip higher ahead when the market is collapsing. Okay, at 37.65, we're telling you to load on the call side. We're actually, guys, at 10:29, this is what I sent you. I said target S&P to finish the day by 4 p.m. 38.21, 38.41 level. When did I send that? When we were here at 37.59. Guys, that's almost 100 points higher when the market was dropping. That as 13 market moves. Perfectionists here, we told you that the market was actually going to rip the hell higher, and not by just a few points. We're not talking by just a mere bounce. We're talking about a huge rip higher, which we told you 4.5 hours, 5.5 hours before it even happened. Add calls. That was the message for the day. Do you see any puts here, guys, anywhere? Absolutely not. So this is the second part of the move 4, right? So we basically would drop, we bounce, and we drop again. And certainly, guys, I mean, if you are an average trader, okay, when the market bounces, you have the hope, oh my God, it's fine, it's going to go higher, everything is okay, right? And then it does this, right? It drops. it freaking drops again. So at this point, you're like, well, no, there's no way. There's no way it's going to go higher. Okay, so I have these students, they're texting me like, hey, is there still hope? Is there still hope right here? Leo, please tell me if there is still hope. Which my response is, I mean, and this coincides with the second drop during the day. I'm like, of course, watch the market go 50 points higher in the next 3 hours. And so full confidence, understanding 13 market moves curriculum, that the resolve is to the upside by the end of the day, despite of the market drop, pop, another drop. Is there hope, Leo? Yes, of course, if you understand what a move 4 is. Okay, so part 2 of move 4, guys, similar stuff. Just want to point out, nowhere here, nowhere does it say buy puts. Nowhere. I'm going to explain this position in depth in just a little bit, but understand when the market is dipping, when the market is dropping, okay, and I know it's weird to hear me say it, okay, we're buying the dip. We're actually buying the dip all day today. Calls. There's nothing here about puts, okay? Now, here's another student. At the same time, the market is doing this. He's like, boss, are you sure about the S&P 500? Because, like, he's on the call side, right? He's on the call side. His calls are, like, way out here. 1825 strike, I mean 3825 strike. He's like, are you sure? Like, so it's okay to be bullish here and bullish here, but now you get a second drop down here. Oh, damn. Things are just not looking that bullish anymore. So from the psychological point, trading the markets, everybody's brainwashed by the media. Things are so bearish. They're so bearish. They're so bearish. Everybody's a fucking bear. What can you do? I mean, you're conditioned psychologically to be a bear, to where things bounce, you're like, oh my God, it's going to bounce. Oh my God, it's another drop. Like, you can't even see straight that it is a highly bullish move 4. For those of you that understand what a move 4 is, it's actually a green move, because this is what happens next. So for the guy that's asking me, Leo, are you sure? I say study the 13 market moves courses, okay? Because this is when everybody's screaming, are you sure? Oh my God, are you sure you want to be buying calls, man? I don't trust the market. Here's another guy, Leo, you sure, man? It's not looking good. And they're doing all that when it coincides with the best entry point. Are you sure? Fuck yeah, I'm sure. Buy the fucking calls. Make some fucking money. Okay, but what happens in this? Okay, they see the market drop. They're like, oh, they see it drop again. And what an average trader does, they never get into the trade until like here. Why? Well, because now they clearly see, well, no, oh, it looks like we're going much higher. Well, the problem is when you enter here, the majority part of this move from, 37.50 to 38.10, that's already gone. Like, you missed 60 points of the move. But now that it's clear to you that the market is going to move higher, you're going to enter right here. Well, guys, that was our target. We told you early in the day, 5 hours before this happened, we told you that we don't want to be buying puts. We want to be all calls all day, buying the dips, okay? We told you the target for the rest of the day was between 38.21 and 38.41. We hit it right in the middle, right? 38.33, very 15 minutes before the close is when the target gets hit. Observing all this, why does somebody make a lot of money when somebody doesn't? Well, because it's highly uncomfortable buying calls right here. It is highly uncomfortable buying calls right here. The only sanity you can get as a trader is to understand the market structure, which I'm going to talk to you about in just a sec. But as far as today's trades, okay, you have to understand a move 4, which if you would have studied the 13 market moves course, you would have also understand that 4-4 sequence is quite frequent, just as a 12-12 sequence, basically where the market dips and it hits prior levels. I don't have the inserts from the prior day alerts, but we're basically alerting you to buy calls when the market was here. We told you, hey, when the market hits 37.41, start buying calls. And so we nailed the prior day's move as well. Right? The move 4 formation, it dips and then bounces higher. It dips again and it bounces higher. All right, so we had 2 4 moves, which are green moves, back to back at the same time the VIX was dropping, which is highly, highly significant to understand how to read the market. While yet, understanding this structure right here, okay, that the only time you could have a move 4-4 sequence, understand this, is when the number of sellers is diminishing. In other words, the market could easily drop more, but it's not dropping because the number of sellers is diminishing. In order for the market to drop more and break the prior lows, it would take an increase in the number of sellers. But at this point, what you have is the number of sellers is decreasing while the number of buyers is just beginning to increase. So because the market's been dropping like crazy in the last few months, you're thinking, well, no way, it's dropping again. Sure enough, it's going to go lower. But in reality, the market structure is transitioning. It is a TRO. At least temporarily, the market, by definition of the market structure, absolutely has to move higher before it can drop again. And the 4-4 sequence tells you exactly what you're supposed to do as a day trader on each day. To summarize all of this, guys, the question, actually one of my great traders asked me today is, he's like, Leo, I just don't get it. Okay, the question is, Leo, you're known for your best trades on the short side. Why aren't you buying puts right now? Why aren't you buying puts, Leo? Everybody says the market's going to drop, it's going to drop, it's going to drop. Okay, well, my response to that is this. Look, it's very simple. Okay, this is the foundation. Okay, the 13 market moves helps you trade day-to-day activity in the market, but just as far as the overall, you have to understand the market is down 30%. Some stocks are down as much as 90%. There's bullish divergence everywhere. If you would have studied our 13 market moves course and the charts divergence course that deals mainly focuses on divergences, you would have understand the bullish divergence is omnipresent. It's everywhere. I'm going to give you a couple of examples in a sec. But I'm telling you, listen, I can't short this market conditions that is absolutely insane. Nobody is selling anymore. Understand this. The only way the market can drop if the number of sellers is exceeding the number of buyers. Those are not the conditions of the market anymore, which it's hard to understand if you are just a part-time trader. You just maybe watching the market at times. But if you know what to focus in, you understand that, look, the rhetoric, everything they talk about in the headlines is bear, 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 while the market is clearly going through a shift, at least a temporary shift. If you listen to my last video about the 1974 analog, sure, things are bearish as hell. But it doesn't mean that they're bearish yesterday, and it doesn't mean that they're bearish today. Because again, by definition, the market has to go higher before it can create another leg lower. And so you can't wake up every morning and expect the market to just drop again and drop again and drop again. Okay, the market has been selling off for the last 6 months. So it's down 30%. Like what? I mean, you want to short the market when it's down 30%? No, the perfect time to short the market when we told you when it was at 4,700, okay, 4,800. If you've been following our videos, you know we've told you to short the market at that point. Jesus, we've told you to short Coinbase when it was at $320. Why would I want to short Coinbase now at $47? Okay? No, we told you to short it at $320. I don't want to short it now at $40-some. No, I want to go long coin at this point. The damn thing is down 80% from where we told you to short it, as many as other stocks. But I don't want to be shorting coin now. Does it mean it cannot drop? Sure, Coinbase can drop, but you've missed the big drop from 320 to 40. You don't want to just, all right, can it drop a little bit? Sure. But that's not the time to be shorting some, okay? Some stocks, again, they're down 90%. I don't want to short a stock that in the last 6 months is down 90%. I wanted to short these things at the top. We told you. We took action. We shorted these things. We want to short stuff at the tops. We don't want to be shorting stuff at the bottoms, okay? UPST, guys, you know that. UPST. We shorted that thing at 400, okay? UPST. It's at $30 now. Do I want to short this at 30? Hell no. Well, it's obvious everybody wants to short it now because it just looks like it will never go back up. This is not the time to be shorting some. It's down from 400 to 30 bucks. I don't want to be shorting this. Come on, let's get real here. That's not where you make the money. The biggest move in this thing is gone. The biggest move to the downside is gone. The probability of a bounce, a sideways trend, that's the highest probability here. So I don't want to be doing this. I don't want to be shorting the market where nobody's selling. Okay, the market simply cannot drop more without first going higher. So it doesn't mean I'm not shorting the market on the bounce. I'm not shorting the market right this second. And so I've told this trade to get 37.85 calls on S&P 500. Look, that was lunchtime. That was 4 hours before. I mean, when I sent him this message, S&P was trading at 37.70, 37.73. So this trader did take action. He was able to basically put a 4 or 5x trade together simply on these 37.80, 37.85 calls. All right, so done. I told him ahead of time, next 4 hours we are going higher. And I told him that when the market looked like it couldn't pull out of the funk. So trust the move. Okay, you don't have to trust the market. Trust your calculations, trust the move, trust your strategy, trust yourself, believe in yourself, believe in your calculations. If you have no foundation, if you're just bouncing, all the market is up today, all the market is down tomorrow, I promise you, you will never ever beat the market. You will keep jumping from trade to trade to trade to another trade, okay? You will never come out ahead as a trader. You have to hold your ground. You cannot be the market's bitch. And it starts with you overcoming your fear. So to summarize everything I've said right now on the charts, there's a simple bullish divergence right here. Look at the RSI divergence. So the market drops. Here to a level of 3,800, and we are just above 30 on the RSI. The market drops another 200 points lower to 3650, which were predicted was going to be a short-term bottom. But VIX doesn't drop lower. Do you see that? So the market here, the RSI is here. The market drops lower. The RSI does not drop lower. Here's the case of your bullish divergence. So in other words, if the market drops to a new lower level, then this by definition should drop, but it doesn't. So from here to here, you got 200 points. The market drops lower. This doesn't. That's your first sign of a bullish divergence. Okay, and now as you see, these thin candles right here, when something drops, they basically represent a lower volume type situation. So as you can see, we had highly bullish gray candle here, highly bullish gray candle here. Now the market dropping for 1, 2, 3, 4 days, but guess what? It's not accompanied by as high of a volume as this. That tells you that there are less sellers in the market. On top of that, we got a bullish cross right here on the MACD. These are certainly not the conditions that I want to short. All right, when you look at this situation here, it's bearish, but it's highly bullish. Situation 2, look, nothing in the market is independent. Everything is correlated. So in this situation, it's bearish but highly bullish. Okay, I've pointed to this divergence, bullish divergence right here. But now I'm going to another chart, and I'm pointing out to this correlation between VIX and the market. So the market goes lower. When the market goes lower, sets new lows, VIX is supposed to be breaking out higher, but that's not the circumstance at all right now. As a matter of fact, VIX which should be doing the opposite of what the market is doing. Okay, so the market's been dropping the last few days, and look at the VIX. Black candle, man, that's highly bearish, right? So you get a black candle. For those of you that haven't studied the chart's diversity course, you know black candle with a formation like this, that's highly bearish. So we get a huge move lower on the VIX. All right, so we're getting a series of lower highs. Guys, those are not conditions to be short the market. Okay, it's just simple. But you're tempted to short the market every time you see the market is about to drop, because you've been seeing the market drop. You can't pick yourself up from shorting the market. Understand that there is a trend reversal, at least a temporary trend reversal that's happening. And you just can't get yourself to simply hit buy calls button, because you've been so brainwashed by the charts, by the market, by the news. Every time you see the market pop, it drops. You cannot get yourself positioned on the call side. And oftentimes, psychologically, this is the moment that will coincide to be the greatest moment for you to be positioned on the bullish side, at least temporarily. All right. Again, because the options are underpriced, you can get 10, 20x sort of trades. Not on the bear side, on the bull side, guys, on the bull side. When you see VIX doing this, look, you do not want to be buying puts, okay? No matter how you feel about it, again, the money in the market is not going to be made by you feeling good. Oftentimes, you will have to be in a position where you're highly uncomfortable, highly uncomfortable. You would literally have to do the opposite oftentimes of what your gut feeling is telling you to do, of what you hear a lot of people are doing in the market, in order for you to actually make meaningful money in the markets. So it's okay to be uncomfortable. It's okay to be out of what, you know, everybody's thinking or what everybody else is picturing and telling you to do, guys. Focus on this chart, right? It's bearish, but it's highly bullish. We're looking at the VIX. When VIX looks very bearish, well, it's highly bullish for the market. VIX goes lower, the market's supposed to move higher. But in this case, it's even greater bullishness for the market, because VIX is dropping while the market is attempting to drop lower, and it is failing at doing so. So it's bearish, but it's highly bullish. Okay, we're dropping, but VIX is also dropping. We're dropping, but relative strength for the market is actually going higher. We're dropping, but MACD is actually making a bullish cross. So there's a lot of bullish signs everywhere, and therefore you should be looking, okay, well, the ratio of the buy volume in relation to the sell volume, it's changing. Okay, we used to have the sell volume much greater than the buy volume. Well, now the tables have changed. I mean, this is the beginning of a TRO, so the next move could be here. Okay, as explained in the prior video, there are times where the market is going to do, it's just going to touch the bear trend, which we're presented here by the blue line, but at times the market's going to overshoot. I think we're going to this situation right here of the overshoot, and once we get there, that would be the time to short the market. So meaning we get above the 4,000 line, I mean, that would be the time to short the market. Maybe 4,100, like right around here. That could be a good entry point, which could be the equivalent of this point right here. But at that point, of course, we have to measure some of the technicals. We have to look at some other things and factors to really understand whether that would be the ideal point to short the market. Because, I mean, based off the last sequence that we're reading here, 30 market moves, 4-4, guys, that's a highly bullish sequence. That's positioning us after Monday holiday for the 4th of July. That is positioning us for next week to actually be on the bull side, like Tuesday, Wednesday. Okay, those could be bullish days. But remember, oftentimes these bullish days, they're not going to start with the market actually going higher. So if you are a typical trader looking at the charts in the morning, you're like, oh my God, well, Leo was wrong. The market is going red in the morning. Well, let's see what the market is going to be by the end of the day. All right, because as a trader, if you want to make a bunch of money, you don't trade just the 5 minutes of the market. Overall, you want to figure out the overall move, where the market is heading by the end of the day, whether the market is going to gap up or down the following day, and so on. So it is normal for the market to make a small dip in the morning on small volume, which actually would be highly bullish for the market. That would be the first giveaway that the market is actually positioned to continue the move higher. Now, if we have like a huge gap up to 3,900 on Tuesday, clearly expect a pullback, okay, before the market can reverse. So expect after a 4-4-7, after a 4-4 sequence, the market to have a 80-90% probability of a 7 move on the follow-through day, which would be Tuesday. And in the 7 move, if you study the 13 market move scores, you should clearly understand that they will be buying the dip in a move 7. Damn it! Why it's got to be so complicated? We make things so simple here at 13 market moves. So if you dare to be extraordinary, if you believe in yourself, all right, if you believe that greatness shouldn't come at zero cost, where you just, get an alert and you just rock with it. And, as you can see, a guy that understands the 13 market move scores, he takes the alert, he takes the count from 2,500 to 18,500 today. The guy doesn't understand the 13 market moves curriculum. He doesn't do absolutely fucking nothing. He bitches and complains and whines, okay? And he misses on an opportunity to make $90,000 today. So you choose which guy you want to be, but I'm looking for guys that dare to be extraordinary. I believe in God, and in the Bible it says that God didn't give you a life so you can have boring life, so you could wake up in the mornings and say, well, I don't trust the market today. God gave you an extraordinary life. God gave you a chance to live an extraordinary life, and I believe that you should do whatever it takes to live up to that God's promise that he gave you. So if you don't want to trade like 95% of the traders will, okay, going with the crowd, what the crowd is going to do. If you don't want to do that, if you really want to have an extraordinary breakthrough in your trading account, I invite you to sign up at 13marketmoves.com. I invite you to study all the courses we have here at 13 Market Moves. And I invite you to a challenge to beat the market in the next 30 days. Let's roll. I'll catch you guys in the next video soon.